It's a stable ad coming to you on another Friday update. We're going to update you on the portfolio and on the sort of changes I've made this week. I made a bunch of them, so there's a lot to get to in this video. I'm also going to kind of just talk through some of the things I'm looking at per usual, and then mention some of the just kind of overall portfolio structure changes that I was working on that I mentioned I was going to work on last week. So without any further ado, let's just get into it. The first thing I wanted to kind of bring up here that I just sort of noticed like as a really nice yield on base right now is this Avantis. Now I haven't done a deep dive on this, and I'm not going to do it because this is not something that normally I sort of jump to put money into, but I did notice that there's a lot of money in these pools. So the senior pool is going to be a little bit safer than the junior pool, but you're going to earn less yield because of that safety. And if we just kind of go over here, we can take a look at this. It tells us right here our lower vault risk, which receives 35% of the fees and shares in 35% of any losses. So again, it's not something that I'm putting money into, but there's a lot of people putting money over here. And if you're interested in kind of playing with a little bit or experimenting a little bit, and that's interesting to you, I just thought I'd mention it just because it popped out to me that these aren't small pools, right? These are almost 30 million in here in the senior tranche. So anyway, just sort of worth mentioning on the base blockchain. If we take a look over at Plasma, there's been a bunch of things that DeFi Llama is starting to pull data from here, including a bunch of stuff from Balancer. And I really like Balancer. I use it quite a bit. And those numbers that we're seeing kind of here aren't necessarily exactly up to date, but you could kind of take a look over on Balancer itself, and you can see these pools. There's some really, really decent pools paying a lot of money over here. The first one that it just sort of caught my eye here was 34% over here on XUSD and USDT. XUSD is a stablecoin built by Stream Protocol. And it's brand new. I would squarely put it in the super high risk category for me, which means it wouldn't make up any more than 2.5% of my total portfolio here. But look, they're paying 18% here on the Stream website. And if we kind of take a look here, it's not tiny, right? The market cap's 246 million. So I mean, it's not large by any means comparatively to some of these bigger, more stable coins. But again, for a high risk stable coin, it's not tiny. We could see it's really, really new, right? Here's the price on July. And this is the max chart, right? So it launched over here in July. So it's brand new. And you can see it's been pretty volatile. It's not pegged to $1, which I think is by design. And so again, this is just one of those things that just caught my eye. I may consider at some point putting a very, very small amount into something like this, but paying 34% on a token that is paying you 18%, again, like for me, it would be a really, really small play. The only thing that is a little bit concerning with something like that is when you have a stable coin that's not actually stable, right? One that's yield bearing and one that goes up in value or fluctuates in value, you have the potential for impermanent loss in a pool like this. So that's just, again, something to sort of keep in mind. But again, it looks like a really nice pool here to play with. Some of the other ones that are a little bit more on the stable side for me, you've got USDAI and USDT. You've got this Plasma USD, which is, I believe it's on Plasma itself, you can lend money. And when you lend money on the Plasma app, it actually goes to Aave, but it's controlled by somebody else, so it's controlled by a third party. But it's a fairly stable position. It's done well since the beginning, and it's paying, this pool's paying 22.88%. Pretty nice. I actually would strongly consider this. I have a little ticket out with Plasma because I'm having a little trouble putting money over there, which is not, this is totally a new thing. It's just sort of happened in the last couple of days. So I haven't been able to do anything. Otherwise, I might be updating you with moves that I might actually have been made. But these are just things that I'm looking at right now. Maybe by the next update, I will have moved money over there. Here we have the not staked USDA position. It's paying a lot less, as you can see, 4.78%. But again, just something to notice that people are like all these big players are coming onto Plasma, and so every single week there seems to be new good stuff that I'm able to kind of explore and report upon, and maybe even move money into. Speaking of Plasma, excuse me, speaking of Balancer, let's give a little bit more love to Balancer right now. We could take a look at Balancer and just a bunch of other chains, and there's some really good, nice looking pools here on Balancer. Again, here we got this XUSD on mainnet Ethereum. That's paying 17.61%. So USDC, XUSD. Here's Avalanche, and I actually am trying to put money into this position right now. And again, this is the position I'm having trouble. It's not calculating gas properly for some reason. Hopefully that ticket's resolved within the next day or two on Balancer, and the next update you'll see me have put money in this. But here's the Save USD, which we have a position on in the portfolio, and USDT on Avalanche, paying a pretty nice amount here. Yeah, we could take a look here, just going down just a tiny bit. USDC USR on base is paying 15.41%. Again, these are really pretty decent. Here's another one, 13.5% on Avalanche, 13.25% with this 3 stablecoin pool, which I would be happy to put money into this one as well. Again, something I was looking at earlier this week, and I do have some cash to deploy on Avalanche, and so I may end up putting money in this pool once my ticket is closed and my issues are hopefully resolved. Again, just looking down here, here's a couple more on Plasma we just looked at. Yeah, just some good stuff going over here on Balancer. Let's go over now to the portfolio and just kind of start at the top of some of the changes that I've made. Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it. At the top of some of the changes that I've made. Last week I spoke about Wasabi. I was having problems with Wasabi, and every time I pulled up Wasabi on just pulled up the website, Kerberos, which is a free tool that I use that kind of does basically just sort of evaluates, does like a quick, almost like a quick virus scan of a website, tells you if there's anything fishy or mysterious or any sort of phishing or DDoS attacks or anything that's weird happening on the website itself that says it's not safe to use. And it was just popping up here. I did notify Wasabi a couple times. I haven't heard anything, but it looks like it's been resolved. So it's probably just because Wasabi is a fairly new protocol and maybe there's some things going on there, but it looks like it's been resolved. The protocol is still paying 13.04%, and there is there's likelihood of an airdrop on this. So besides earning 13.04%, there may be like look, I'm getting these streak multipliers and reward points and all that stuff, which may airdrop me some Wasabi, which I will just immediately sell for stablecoins once I get it. But again, just worth noting. And that's the only real change I made on base. On Arbitrum, I moved money out of Fluid, and I put money into both this Harvest position and Pendle. I had money in a Harvest position, and the APY dropped under 10% last week, and so I was looking for anything else on Harvest that looked interesting, and I found it. So if we go back over here, we can see on Harvest, here's the position I found here. It's paying 20% right now is the live APY. That is a variable APY, and that is going to fluctuate. So it could come down here, but it's looking good right now in this pool. And I really, there's a couple of reasons why I put some money into Harvest. One of which in particular is that I was able to take out some insurance on the position, which I mentioned on the last video. If we take a look here, down here are my balances, right? So last week, this is kind of just how I monitor my positions, right? I try to have 50% low risk positions, 30% in medium risk positions, and 20% in high risk positions. The last couple of weeks, these were out of balance. I had too much in the high risk and too much in the medium risk and not enough in the low risk. And so I've been trying to rebalance the portfolio into low risk without just demolishing my APY. And so a clever way to do that is use insurance, which takes away some of my APY. But for me, when I use insurance, I'm protecting myself against the protocol having a hack or something like that. So it moves medium risk positions. It just moves everything up one position. If it's a high risk position and I get insurance on it, it moves it up to medium risk. If it's a medium risk position and I get insurance on the position, it moves it up to me for low risk. And so that's what I've done. I was able to move a medium risk position into a low risk position here, and I'm earning almost 20% on it, or at least 20% at the moment. So that's one thing as I noticed on Arbitrum, and one of the changes I made. Another one that I did was Pendle, and we can before we look at that, I just wanted to point out before we go over to Pendle, I just wanted to point out some of the other Harvest stuff before I get too sidetracked, and just to kind of take a look at. I noticed that Harvest had some really nice lending pools here. We've got ZK Sync, which is not a chain I talk about too much here on on this YouTube channel so far, but I think ZK Sync is doing some really, really cool things, and I do expect to see a lot more. ZK Tech has been improving tremendously. It was sort of like several years ago, it was like, oh, who knows when ZK Tech is going to actually, ZK proofs will be ubiquitous and be used everywhere, but it's starting to look and appear as if that sort of future is happening, is coming more and more quickly. And so I expect to see a lot more with ZK Sync specifically, and other ZK Tech, and maybe other ZK blockchains. But just something that I've noticed. Here's over 18% on Ethereum on the mainnet. Here's a USDC pool on Base that's paying 14.73%. Another one on Base paying almost 14%. So here's another one, Silo on Pendle paying 10.8% on Arbitrum. So again, just some cool stuff on Base, on the Harvest blockchain, the Harvest protocol. Excuse me. I moved money over here into USDAI. I think I mentioned that last week, but let's take a look over here. Yeah, here we go. Here's that position. It's showing here 45% over the last few days, but my position is 44 something like that percent fixed. And as you can see here, it's a short-term position. So generally when I put money onto Pendle in a fixed position, I kind of like to do longer term positions that are, I don't know, like 100 days out, because it's a little bit more set and forget it, right? Like I can just set one of the positions in the portfolio and not look at it, because I know I'm waiting for maturity for that APY to play out. This one's a lot more short term, which is not something I usually like, but it's fine. I know I'm going to get in 41 days, or I put it in a couple days ago, so 45 days or whatever from the time when I put it in the position. I know I'm going to get that 44% of whatever it was fixed, which if we average it out over 12 months comes out to really just like 4.44% or something like that is what I'm actually going to get. So I'll end up having to move the position around, but it's just something to kind of put it into for the next 41 days. And then hopefully USDAI is growing really, really rapidly. It's a stablecoin that's growing super rapidly. So maybe we'll find another fixed Pendle pool that might be a little more longer term after this one. But anyway, it's just a small position. It's like 1.5% of the portfolio here that I put in there. Let's move down to Polygon. So Polygon, I just want to kind of note a couple things, but I put money last week into Compound. Now let's just pull it up here on Polygon, right? So I put money into this USD coin, this bridged USDC coin, specifically on Polygon. It was paying, I don't know, a ton of money. It was paying like 20-something%. overnight that vanished. I mentioned on the video that I didn't expect it to stay that long, but it didn't. It lasted even shorter than I expected it to. It went like to 3%. Now you could see it's back at 9%. So I immediately switched over to this tether position, which was paying over 11%, and now you could see it dropped back under 4%. So I wanted to mention it because sometimes like the best move is just to leave money in there. People move money in and out of these things so fast, especially when they see the APY disappear, that what they do is they rotate. They do exactly what I did. So they moved money out of this USDC into this tether or to some other position, and the APY dropped, and then it just came right back. So again, I could have just kept money in this. It went down to 3 or 4% for a day or two, and then back up to almost 11%. That's a pretty nice pool for a low risk position on Compound. But what I did was I just sort of taking my own advice. I'm not going to move it out of this tether position. I'm going to watch it for a few days and see what happens. I'm hoping that because the utilization dropped down, maybe the net earn is going to drop over, is going to pop over 3% and come back up to like 9-10%. But in the meantime, I put that over here on Beefy. So I've taken my Compound position and put it over at Beefy, and I'm making 8.1%. So I'm just going to watch this. Hopefully the APY stays steady. Again, it's not a large amount here, right? It's sort of, I'm always trying to earn 10% or higher. That's kind of my goal. But if I could take a low risk position and earn close to 10% or above 8%, I'm pretty happy with it. And so we'll just watch it. I'm just going to see, maybe this pops back up to 10%, 12%, whatever. We'll watch it, and if it's kind of stays steady and it's around 8 or under %, I'll probably look for something better next week. But that's what I did with that position on Compound. I mentioned the last couple of weeks that I might move money completely off of Compound over to Plasma. I probably will do that. I just haven't done it yet because I'm just waiting to see more things come over to the Plasma blockchain, and I'm seeing, what now with the balancer stuff that I mentioned today and some of the other stuff, it's looking more likely that I probably will move this Polygon stuff over to balancer. Moving over to the Avalanche blockchain in the portfolio, I did make a bunch of moves here. Some of the APYs kind of went away or dropped, and I had a bunch of medium to high risk stuff over here that I wanted to rebalance. As I mentioned earlier, doing my whole portfolio rebalancing. And so as I mentioned earlier, one of the ways to change the balance was to move from high risk to medium risk, and medium risk to low risk was to use insurance and Beefy. The Beefy protocol has insurance that covers on the Avalanche blockchain. So that's what I did. I had these positions over on Euler, and Euler does not have insurance on Avalanche. So I just moved them over to Beefy. And we can take a look at them over here. Here's some of the stuff on Avalanche here. I moved it in specifically into these two positions, as you can see here, into this USDC RE7 Labs position, which is a position I already had on Euler, and then I moved it over to this Varlamore Euler silo position here for USDT. And it's, you can see here, it's 13.47% now and 10.91% over here now. This one's paying a lot more, this MEV, and I might move money over there because I mentioned I do have cash on Avalanche that I'm considering. But these are variable APYs. They fluctuate a lot. This one right here has had higher average APY, and MEV has had lower. So I'm just going to watch it for a couple days, see what's going on, see if these stay the way they stay. If they do, and this MEV stays at 15% or even higher, then I'll move some capital in there. If it drops down, then I'll be happy that I kept it into this RE7 Labs one. So that's what I'm looking at in terms of Beefy. And again, the insurance really helped me balance my portfolio. Again, it cost for 30 days. It cost, depending on how much you're putting into these things, between $2 and $5 or something like that, which if you had to kind of balance it out annually, is going to come to around 2 or 3% of that APY. And so it's not something I want to do if I can avoid it. Right? I'd love to have lower risk positions that are just paying higher, but if I can't kind of do it, I'll use insurance to kind of help me out here just to keep my portfolio and overall balance, and I'll take the APY hit. I moved money out of this low risk position, this Aave position. It was paying, I didn't update this, is paying under 6, I think it's paying around 6% here. So I moved it out of that, and I've got now money sitting over here in cash that I'm going to have to figure out what to do with. And I mentioned some of the things that I was looking at for those positions there. Now, all these positions on Plasma are my newest positions, so I didn't calculate how those added up last month because I just added it. The Plasma blockchain just launched September 25th. And so I've just started to kind of do some basic rotation over there. Again, this Aave position on Plasma was pretty low APY, and given the fact that I had made the portfolio changes, allowed me to have a little bit more room on medium risk stuff. So let's take a look at what I did on the Plasma blockchain. So here's the first one here on Pendle. Plasma USD, as I mentioned, is the lending position on Plasma itself that lends to, it is an Aave position just managed by a third party. And then I put that position over here. I think it was paying 8% over on Plasma. And if putting it on Pendle, I get a fixed 11.15%. And this is a set and forget thing for me. It's 111 days. It matures on January 8th. It's a total set and forget. And I'm really happy to kind of just put it over there and not think about it. One of the protocols that launched over on Plasma is Gearbox. Gearbox is a really it's a great protocol. It's on a bunch of blockchains, and they just launched over to Plasma. And so I took this. This is a really nice pool that they're incentivizing with wrapped XPL. So we've got decent organic APY, just under 4%, and then really, really nice wrapped XPL incentive. XPL is one of those tokens where if you kind of believe in the Plasma blockchain, which I do, I'm strongly considering keeping and just kind of maybe hoarding a pile of XPL, just because I don't know, it feels like it's kind of a game-changing protocol for me, but I haven't made the decision yet. Usually I'll take these incentives and I'll just sell them. So we'll see. I haven't decided what I'm going to do with those yet, but I will make sure to mention it in future updates if I do decide to just kind of stockpile XPL. I could see XPL, I could see Plasma becoming, what they're trying to do with Plasma is they're trying to be a neobank. You hear about a lot about SoFi, which is a kind of a traditional yet neobank, not built on the blockchain, built on traditional sort of financial rails, but like with cool tech. And Plasma is trying to be the neobank of both, I guess, traditional and the future of blockchain. And so based on the fact that they've got backing from USDT itself, from Tether itself, from the Tether CEO personally, and just all these protocols have launched basically on day one, the amount of TVL over in the Plasma blockchain, it just feels like a step change to me. And I could see them really becoming the kind of blockchain neobank. Now they've got a lot of, there's a lot of, when these, this is a new tech, right? So there's a lot of potential failure opportunities too. But I really see a lot of potential with Plasma, and I'm really, really excited about the blockchain. As you can see, I've talked about it now, I think 3 weeks in a row if you've been following me. So I'm really excited about what I'm seeing over there. Another thing I just wanted to mention is Plasma USD over here on Auto is paying 13.72%. And if we take a look at our position over here, $500 position, it represents I think 2.5% of position. I want to make this a little bit larger. So if I take that money over from Polygon, this might be where it goes. It's just steady, earning 13.72%. So again, I may not do that, but again, it's just something I'm looking at. I just want to let you know what I'm looking at here. The last thing I'll mention is for anybody that's just curious of what I use for insurance, I use OpenCover here. And OpenCover here, you can kind of see, if we just kind of play around with it here, we can get covered here. And these are all of these these are all the protocols that they cover, and there's tons and tons and tons and tons of them. And then when you open something, let's take a look at Gearbox, for example. So Gearbox is something we just mentioned. I would love to see Plasma covered, but it's not, right? So Arbitrum, Ethereum, and Optimism, are covered over here. Optimism's a layer 2 on Ethereum. And then we can see you can pay on Base, Optimism, Arbitrum, and Polygon. So those are how you pay for the positions here. We could take a look at Auto, for example. I was looking at using insurance on the Auto blockchain, and which I'm not seeing it for some reason. It just appeared here. Here's Tokamak, which is covered on Base and Ethereum only. Let's take a look at one more here. Just for, take a look at Beefy here. Look at all these covered: Base, Optimism, Arbitrum, Ethereum, Avalanche, BNB, Sonic, and Polygon. So again, just when if you are looking to get insurance on any of these positions and they're interesting to you, make sure you go look at the chains covered. You can see who's covering, who's the provider. It's Nexus Mutual, and you can change it to 60 days, 90 days. So if it's like a Pendle position, for example, and you wanted to insure it and it matures in 100 days, you can go and mature something like that for 90 days. So cover it for 90 days. So hopefully this was a good update. It was a long update, so thanks for sticking with me on the video. I probably plan on doing more on Plasma and doing as Plasma continues to grow, I may just continue to move more and more over there, and I may even just develop a Plasma only portfolio, which would be kind of cool. So until next time, have a great weekend, and we'll see you next week. I'm the Stable Lad. I'm the Stable Lad, and if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice, so always do your own research and manage your risk wisely.